All right, welcome everybody. Welcome to Talkin Investing. We are starting a few minutes late. My apologies. You're here with Tom and George after a big week, a roller coaster week. We got a ton to talk about. If you were hyper fixated on your portfolio this week, you probably went crazy. So we're going to look at how it all worked out at the end of the week for the stocks that we follow, for Bitcoin, for the market. We are going to take a look at some big events. We got some inflation data that people are freaking out about. We got Micron announced their earnings. We need to talk about it. You guys have probably heard all about it, but I'm going to bring just a little bit different angle, I think, to what's been talked about there. Also, Microstrategy or strategy. I want to talk about strategy. We talked on our members only stream pretty deeply about this, and what we said was going to happen is exactly what happened on the day we said it was going to happen. So it's unfortunate, but that's what happened. We'll go through that, talk about that, and see what might be next for MicroStrategy. George, what's happening?
Overall, it was a mixed week with investors rotating out of AIs and semiconductor stocks and into industry, financial, and smaller companies. Here's what's interesting, though. The Dow Jones was plus 0.6, S&P down 2%, NASDAQ down 4.6, but the Russell 2000 was up 1%. Technology and AI stocks experienced heavy selling. Memory chips manufacturers remain relatively strong after impressive earnings, Tom. Pretty damn impressive, honestly. I'm sure you're going to talk about those. Fed remains focused on inflation. And oil had a rough week. It is down about 10%, and I think it's going lower. Crypto. We have some problems out there, Tom. Is the egg breaking? Is he out on a ship that's going to capsize? Housing, mortgage rates are elevated, and it seems to be very unaffordable out there. What do you guys think? Is the falling oil prices going to help? Tom, talk to me about, what was it? Micro? Was it macro? What was it called?
Micron was the...
Micron, yes.
Micron's driving the bus. Whether you like them or hate them or own them or don't own them, I think it became crystal clear this week that Micron is driving the bus in this market. I think everybody has I have a different opinion on Micron than a lot of people, and I want to go through why. I don't want to just throw my opinion out at you. I'm going to tell you exactly why I think so, give you some supporting documentation. And we'll let you guys, right? Well, as always, we will do a poll, and you guys can tell me that you disagree. That's fine, or that you agree. So, but I do think it's a case worth understanding both sides, because the talking heads on this one are just talking at everybody. They're not talking to anybody and nobody. And here's the thing: we all know they know what's really going on, but the difference between what they know and what they say sometimes can be a large gap. So that's all I'll say about that. So I'm going to try and tell you what I think the reality of this situation is. And you guys can decide how you want to play it, if you want to play it at all. And we are definitely Sour Melon Gaming. Thanks for the chat member for 40 months. Thank you very much. One of our great early members. STRC was the beginning of the end for Michael Saylor, now being criminally investigated. He will have a lot to answer for. Happy 40 months. Happy 40 months to you. Thanks so much for being a member. It's been a wild ride. We're going to talk about Michael Saylor. We're going to talk about STRC, which is their stretch preferred stock. We're going to talk about their common stock, what's going on. And I think there's some very interesting plays to be made here, depending on your risk tolerance. And I will let you guys know right now, before we even get to that part of the conversation, I told everybody on our Tuesday members only live stream, if we broke a line of technical support it was crystal clear to me that it was look out below, and I was going to have a stop loss in and sell. So I did get out. I took a little loss. I did wait for Microstrategy, or now Strategy, to pull way back before I bought it. I sold that stock at $350 way back in the day. I bought it back at $110, and I sold it when it broke under $100. That was a multi-year line of support, and the next line of support I couldn't even find. To me, it's look out below, and we'll see what happens. So that's short-term stuff. That doesn't mean that MicroStrategy is going out of business. And I'm going to talk about something that's going on in the prediction markets relating to MicroStrategy that I think people don't understand. And it could also be, buyer beware. There's always danger, but it could also be an easy play potentially. So hate to call things easy in the market because you guys know how hard this is, but there's some wild stuff going on right now. It's like never. The market has changed. I'm just going to say this. I have heard so many people over the last week talk about how, everybody always says this time it's different, but it's never different. Well, I'm here to tell you, this time it's different. It's not the first time in history that things have changed. We are going through a fundamental change on how our economy works. Right? That's like somebody in the middle of the Industrial Revolution going, well, this is just a fad. This isn't different. It's just the same. It's all going to be the same. No, the world. So it's like the car. That's stupid. Nobody's going to use that stupid thing. It's, everybody thinks it's different. It's just the latest piece of technology and it doesn't change anything. No, it changed everything. And so did the telephone. And you guys know the list. Well, high performance computing, what we're calling AI, it's a game changer, and you're not putting the genie back in the bottle. So for those people that want to live in a world where they go, well, everything's just the same as it was, and invest like this was 2005 or 1995, you're going to get burned. So I would just propose to you, we'll talk about the things that have changed and why I think it's different. And, if you don't recognize it, you're going to miss big opportunities and potentially have your money in the wrong places. On that note, after that ramble, if you guys could be so kind and please hit the like button. For those of you who are new here, you can also subscribe to the channel. We also have a membership. You can just check that out below if you're interested. We've got a lot of great members. Special thanks at this time to all of our members. I see a bunch of you in the chat. This week went pretty much just like we talked about it would. There was 2 major predictions I made on the Tuesday night stream, and they both played out perfectly. So that worked out this week. All right.
Can we talk about MicroStrategy first, Tom?
Let's talk about
because it's really interesting to me because I'm trying to understand how he's trying to get it back to $100 and how come that, was that arbitrage, I guess you would call it, right?
Yes.
It's just disappeared.
So let's talk about strategy. This is going to be a big one. So I'll do top side right now and maybe we'll get even deeper later. I see Sourmelon Gaming sings. Thank God you sold, Tom. I had to. It was like I said, I never like to say things are easy because investing's unbelievably hard. Most people lose money doing this. It's brutal. We lose night's sleep. We lose money. But there are some things that are just the market's handing you the answer key. And if you got the answer key and you ignore it, well, then that's on you. So there was a few of those types of things this week. And, one of which I cut my losses. But really just as they got started on strategy and I sold. And we'll see what happens. Listen, I hope for the best. I hope they bounce back Monday and everything's fine from now on. But that is not a likely case scenario. So, and, it dropped another $17 in 2 days after I sold it. So It's not doing well. And more importantly, the preferred stock is doing worse. So that's what we definitely got to talk about. So I'll go through it real quick, right?
Did I lose you?
Nope. Can you hear me?
Okay. Yeah.
Okay. So
just put a poll up real quick. Will the market cap of crypto go under 1.5 trillion? 57% yes, 43 no. I was a no.
Oh, wow. That poll's been going for a long time. So just so that you guys know, that means, I believe that means it will go below the previous crypto winter. Now, that's never happened before. So we have a lot of people saying, listen, there's a 4-year cycle. It's intact. This stuff does the same thing. You're not paying attention. This is just the same as it's ever been. But we're going to go through some of the things. Almost everything this time around was different. So we will see. We'll see when or if a bottom is in and when we get back into a bull market. And we're going to have to debate that until it happens. We'll know it. We'll know it when we see it, and it certainly hasn't happened yet. So we're in a bear market. We've been in a bear market for a long time, and basically, I've been saying the real argument is: are we at the beginning of a crypto winter? Are we in the middle of a crypto winter, or are we at the end of a crypto winter? Those are our 3 choices on the table. So a lot of people have a lot of different opinions, and I can tell you, the market overwhelmingly this week shifted towards. There's a lot of pain left ahead. We're going much lower. And when I see that, you know what that makes me think. When everybody agrees on A, usually B happens. So we'll get more into where Bitcoin's going next. But let's take a look at strategy. And I'm gonna add another thing. A lot of people are worried, strategy. I said on the members only stream, this stock is broken. The preferred stock is broken. The preferred stock is in line ahead of the common stock. So to me, there's no real chance that the common stock is going to run until the preferred stock is fixed. Because we're behind, the common shares are behind the preferred shares. So it's got a long way to go to get right. Having said that, a lot of people think, well, if MicroStrategy is doing bad, Bitcoin's, going to get decimated. And I disagree with that vigorously. And I'm going to walk through the case. MicroStrategy has, 850 odd thousand Bitcoin. There will be no mass sale of Bitcoin. They are not going to flood the market with Bitcoin. They have no need to do that. Now, they will probably slow down their purchasing of Bitcoin, but they've done that before many times. I think people are fixated that, if strategy's in trouble, Bitcoin's in trouble, and I got to get out. So I would make the counter argument that I understand they are by far the largest institutional holder of Bitcoin, but the way their debt and equity is structured, there's really no reason for them to sell large quantities of Bitcoin. They are on record that they're not going to do that. And so I don't think this is the short-term demise of Bitcoin. And I think all of this is short-term stuff. It's just hard to define what's short-term. Is this going to fix itself in a month? Is it going to take 3 months for strategy to get back on track? Is it going to take 6 months for strategy to get back on track? They will get back on track. Their preferred stock has mechanisms in place, and I'm going to go through those mechanisms, and I'm going to tell you why I am very strongly, get ready to put your hate in the chat right now. I am very, very strongly considering buying the preferred stock right now. So that's where this will end. Gambit Beer, we all have difference of opinions, and I don't take anybody that disagrees with, if you say I'm an imbecile or call me a 4-letter word. I guess that's not very nice, but that's not what you usually do.
You're an imbecile.
You give. You've been calling me that for 50 years. Listen, alternative opinions are welcome. That is what we're here to discuss. And I always appreciate you're one of our longtime members, and you often have a counterpoint to my point or George's point. So please don't stop.
I'm going to tell you one thing. I just know that the next 3 days, we got a full moon coming up. And so I figured it out, by the way. I shouldn't tell you. I'll tell the stream what I figured out. Remind me to talk about the full moon then. But the full moon's coming, and it's going to be good.
That's going to be good then. According to the world, according to George, full moon coming, and that's a good thing.
Well, it's good for the plans. It's good for everything.
How many likes are we at, George?
I don't know. I haven't even liked it yet.
Oh, man.
I'm still debating.
You're still on the fence about it? 29. We're going for 150 likes. Do us a favor. Last week, the likes last week helped push the stream out a lot. I don't want to talk too much about it. We're here to talk about the market, not about our stream. But I just want to know it's very much appreciated. So thank you guys in advance, and thanks for those who have already smashed the like button. And
my question is, has crypto become political?
Well, my answer to that is two things. Number one, I think everything has become political, and I decided that almost a decade ago when there was a point where I used to record. I'll just do a very quick anecdote. I used to record while I worked all day. I recorded every single show on ESPN because I couldn't watch them while I was working. And this was back when I had TiVo, and that was, the technology of the day. And so at night I would watch all the shows on ESPN. And there came a point in time where the vast majority across 5 or 6 different shows, almost all they talked about was politics. There was no sports. It's like, what is it? You are the self-proclaimed worldwide leader in sports, and you don't talk about sports anymore. I can get politics on 150 other channels right now. You're the sports channel. So is Bitcoin political? Unfortunately, everything's political. And Bitcoin has gotten particularly political because of a certain... Wait for it. Is it not working? Oh, here we go. Trigger warning. I'm about to say the T word. So go to your room where you can pet your cat or whatever if you can't hear the T word. Donald Trump is pro-Bitcoin, and that makes certain people insane, and it automatically makes this massively political. I don't want to talk politics, but that's the reality. The Clarity Act is not passed solely because there was some stumbling blocks. They've gotten past all of them. The last one is that Donald Trump is involved in cryptocurrency, and they want special rules in there, essentially because of Trump. So yes, it's very political. I see someone in the comments saying, can't miss Pardon the Interruption. Let me tell you something. I watched Pardon the Interruption from the beginning. It's a show on ESPN. I watched that show every single day. And because I had TiVo, I never had to miss it. I went it was like 12 years without missing one single episode of Pardon the Interruption. But those two guys, one of which is from my neck of the woods where I grew up, all they talked about was politics. That's it. It was a show on politics. And Around the Horn right before it, even 10 times worse. So very frustrating to me. Anyway, so, I digress.
Tom, are you nervous then with MicroStrategy, or do you think we've leveled out, or do you think it's going lower?
Well, let me go through this real quick. So they did add $35 million worth of Bitcoin, $300 million in cash reserves last week. That's not really the news. Here, Strategy has a 10-month cash runway for dividends. This is important because everything right now is not about their common stock. It's about their preferred stock Stretch, stock ticker STRC, which is the vehicle by which they've been raising money. Everything was fine. Everything was going along on cruise control. A lot of the articles I'm reading are saying, oh, Stretch, their preferred stock is now trading in tandem with Bitcoin. Nonsense. Foolishness. Stretch, their preferred stock, has a par value of $100. It traded at $100 until it broke. It's not trading down because Bitcoin's going down. This is the fourth time we've retested $60,000 for Bitcoin. Stretch didn't blink the other times. This is going down. I'm going to call it coordinated market manipulation, but there was a catalyst, and they can blame themselves. Bearing in mind they own 850,000 some odd Bitcoin, they decided to sell 32 of them. You heard that right. 32. Or about 1/100th of 1% of their Bitcoin. Something like one of us deciding, you know what? Let's hit the Wendy's drive-thru on the way home and buy a flurry. Right? Proportionally speaking. So what a bunch of big money did was they grabbed that and they scared everybody into submission. And they shorted the common stock beyond belief. They broke the preferred stock, and this is spiraling. But it is not, in my opinion, a death spiral. It is spiraling downward. They will make their money on shorting this. And when the time comes, they will get out of that trade and things will return to normal. And I'm going to tell you what the case is for that. But it's important to understand, number one, they have a 10-month runway for dividends. So those people who think, oh, they're going to have to sell thousands or tens of thousands of Bitcoin, for the next 10 months, they can just pay for their dividends without selling one single Bitcoin. Now, again, what might slow down is their purchase of Bitcoin. It's going to slow down. So, okay, it's important to understand this piece of the puzzle. Okay, here's how bad it is. Here's how bad people are piling onto strategy. This article has literally nothing to do with strategy at all, yet the headline is, it's an article about how Bitcoin's having a bad year. With crypto ending the first half in the red, Bitcoin's solace is it beats strategy. So at least it's better than strategy. Kick me while we're down, the worst stock in the stock market, loser, loser, loser. Like this headline, this article has nothing to do with strategy, literally nothing. It's about how cryptocurrency and Bitcoin had a first. They don't talk about strategy in here. They don't go through the what's going on with them. They just say, well, you know, the only solace you can take is, you know what, as bad as Bitcoin did, strategy did even worse. So it's a piling on effect here. And I picked this one in specific because, you know, in addition to the 10,000 articles about how strategy's dead, like this one isn't even about strategy and they're still pounding on it. Okay, so here's their common stock. $82 is trading at $81.89 after hours. So I'm going to go to their chart. We looked at this on the members only stream on Tuesday. At the time, we were here. We were above. Now, we had tested right here. That was back in February 5th. If you remember, the entire stock market had an absolute panic attack. Almost every asset, without exception, flash crashed on February 5th and recovered within 24 hours. So we tested this line of support back then. This is at $101. Then you got to go back in time. You got to go to the way back machine. August of 2024. Tested it. Check. that held. And look at the drop off, right? This was down 43%. It was sinking like a rock, and it bounced off of this line of support. So this was a very strong line of support. Back in April of 2024, check, right? Tested it, held. This goes all the way back to February of 2024. That's over 2 years ago. So to me, the next line that I found, and this is a very old line, if I reconsidered, I think you could argue there's a line somewhere in the 60s and then somewhere in the 40s. So once we broke 100, that's why I said it will be look out below. And sure enough, I mean, it's 2 days later and we're at 82. This is in the middle of a run where strategy is down 58% in a month and a half. So this stock's getting taken behind the woodshed. This is a beatdown, right? So I got out. I told everybody I'm going to do a stop loss and get. I just can't. There's no reason. History tells us very clearly here, statistically speaking. Could it be wrong? Always. You could. And these technical analysis are all always right until they're wrong. So I understand. This could have been the anomaly. This could have been the exception. But this is not just a little line of support. It's a multi-year, incredibly strong line of support. In addition to that, the narrative around strategy keeps getting worse and worse and worse. The preferred stock is unhinged. So to me, it was time to get out. So I did take a little bit of a loss on this, but I think I avoided a big loss and I deployed the capital. I will show you later. Everything that I bought the next day is up huge today. Now, way too soon to decide if that's a good trade or a bad trade. 1 or 2 days of activity is irrelevant. I will keep these stocks for long periods of time. So we'll see what happens in the long run. But there was some other pretty obvious buying opportunities yesterday. I will go through those as well. But let's get through the strategy conversation. So while their stock has tanked, this is their real problem. This is Stretch, STRC. This is their preferred stock. This stock has an 11.5% dividend. 11.5%. There's not too many places you can go to get an 11.5% dividend. There are some places. I'm not saying there's none. I could name a few, but they're super high risk and I won't. One of them's in this space. One of their competitors has a product at 13% interest. But this chart,
my cousin Vinny. Sorry.
This chart, you can see, here's $100. This is the 6 month on this. This stays at $100. You're going to see one panic attack, and you're going to see that was, it's hiding the date, but that was February 5th. Here, February 5th. You can see it on the screen. So remember, I just got through saying every single asset in the stock market had a 1 day panic attack. Look at the next day, right? And all that did was go down to 93. So the panic attack was 93, got back to 100 in a couple of days. So this is a $100 par that has kept its par. This detached from par, and it is now sinking fast. It got down under 95. It got under 90. It was hanging out, at 88. It got down under 85. I mean, this is pretty much a straight line down to 74.5 today. I did not buy this yet, but if it continues to go down, there's another piece to the puzzle that people don't understand. Or they may understand, and they may just not want to take the risk. But I want to make everybody aware of it, just in case you're not aware of this. And I'm not telling you to buy this. Understand, this is in a free fall. I think it's likely to fall worse than this. My strategy, if I buy this, is to buy some and continue to dollar cost average in on the way down, because I don't think it's done getting punished. But I do think it will end up back at $100. Even $95 would be just fine to me. I just don't know how long that's going to take. And so, you're going to tie up your money in the middle. But here's why. This is an 11.5% dividend. That 11.5% is based on par value. So they're paying 11.5% at $100. You can buy this for $74 right now. So your effective yield is more like 15 or 16% right now, not 11.5, right? So in addition to getting a 15 or 16% yield through dividends, ultimately, if you believe that Microstrategy isn't going out of business, then this is going to move back towards par. Is that going to take 3 months, 6 months, 9 months, a year? Nobody knows what the answer to that is. I think this will news. All I can tell you is the news cycle goes very fast. Not too many things last a year or 2 years, right? The market will be moved on from thinking about this. This will return, and there's a reason it's going to return. So the first reason is right now, if I buy this, I'm getting 15 or 16% interest and the appreciation that is, in my opinion, highly likely back to somewhere between $95 and $100. So I'm going to get a bunch of equity appreciation in this while I get paid, 6 or 7 times what the bank will pay me to put my money there? So that's the upside. The downside is, listen, if this could keep going down, and I think it will. My strategy would be to dollar cost average in. I think it could go all the way down as low as 50. That's 50 is a catastrophe, because here's the other thing that happens why at some point this will stop. All eyes on Strategy's June 30th ex-dividend date and monthly STRC dividend rate reset. This is a preferred stock, so it's never due. It's a perpetual preferred stock. This is just like common stock. They don't owe the principal. What they owe is a dividend. They've targeted this at a par value of $100. What they have done in the past, and the reason it's currently has an 11.5% dividend. I see Sour Mountain Gaming in the comments saying, Tom, please do not buy Stretch. I hear you. I'm just going to lay out the case. I'm going to let everybody decide. Obviously, it's your decision whether you want to do this or not. But what they have done, every time this has lost par by even a little bit, they raise their interest rate. And what that does is it makes it more attractive to people to say, okay, this started at 10%, went to 10.5%, went to 11%, went to 11.5%. And that has that's why they were so steady. If we look at the chart again, look how steady they were at par at $100, right? This was like these ex-dividend days, this got down to $99.30. $99.10 was the low on the day, right? And that's because they gave a dividend. And then, back to 100. So this was working just fine. They sold 32 Bitcoin, and that was like that was a catalyst that has this has gone to a place that it doesn't belong, that's irrational in my opinion. So let me go through the rest of this. Strategy's perpetual preferred stock is down 3% during Friday's pre-market. So this was early this morning. It's trading below 73, around 27%. So we saw it got a little better than that. It's at 74 and change now. 27% below its $100 par value as investors focus on June 30th. Remember, if you buy this today, on June 30th, 4 days from now, you're before the ex-dividend date, you're going to get an 11.5% dividend based on a $100 par value, not based on 73 or if it goes down less. So your effective yield is much higher than that. So a date that brings two important events. First, June 30th is the ex-dividend date. Investors who own shares before the ex-dividend date will receive that next payment, while buyers on or after June 30th will not. The date also serves as the record date when Strategy shareholders qualify for the distribution. Eligible investors will receive Strike's first semi-monthly. They've gone to semi-monthly to further incentivize people. We're going to pay this out twice a month. That doesn't double the yield. They're just paying it out half and half twice a month so that you get a more steady, constant flow of income. And then you'll get that on July 15th. Normally, a stock declines by roughly the amount of its dividend when it begins trading ex-dividend. For Strike, at a 48-cent adjustment on a $73 stock represents less than 0.7% during a time when Strike is falling as much as 2 to 3% a day. So the ex-dividend date, in theory, should not be a huge catalyst further down for the Strike. What they're saying is it's already down 27%. The fact that they're doing a 0.7%, effectively a 0.7% dividend, isn't really going to move the stock. The bigger catalyst is Strategy's monthly dividend rate reset. Strike is a perpetual preferred stock, meaning it has no maturity date and pays a dividend that can be reset periodically. Strategy has maintained the dividend rate at 11.5% for 4 consecutive months, despite Strike trading well below par. Now, it wasn't trading well below par when they did it the first 3 months. Now it is. With a 1-month volume weighted average price of 91.46 and shares now at $73, the stock's effective yield, the annual dividend relative to its current market price, has climbed to roughly 15%. So this is what I was just talking about. But it's better than that. That suggests investors are demanding a much higher return than the current rate reflects, making a modest increase to at least 12 or 12.5% is expected, meaning they're going to raise the interest on this. So you would think, oh, they're in trouble. They can't pay all. They only got 10 months left of interest. They're going to lower the interest rate on their preferred stock. No, they can't lower the interest rate. This stock already can't hold par. They're going to raise the interest rate in all likelihood. That is the most likely case scenario. That is what they have a track record of doing. So this is going to go up. So now it's going to be 12 or 12.5%. Remember, that's on a $100 par value. If this keeps sinking, let's say this goes to $50, your effective rate is now 25% yield if you hold this. If you don't think buyers are going to move in at some point to collect a 15% or 20% or 25% yield on their money, oh, by the way, paid out twice a month, this is how this stock gets fixed. There is a price at which everybody moves back in. I am not willing to wait with the common stock because all of this has to happen, in my opinion, before the common stock, MSTR, can start to recover. So they first have to fix, in my opinion, their broken preferred stock. When that happens, I think they will naturally see a rise in their common stock if Bitcoin is moving up. Obviously, this is tethered to Bitcoin. The other thing worth noting is we've been watching this for a long time. The MNAV on this is now 1.00. So I've been saying for the last 6 months, I'm playing this as though 1 is a floor for the MNAV. I think that formula is broken. Now, it happens to have exactly reached 1.00. I think because their whole system is broken and they have to fixate on the preferred stock, this could keep going down, which means Bitcoin could go up and Microstrategy's common stock could go down. That's not a guarantee. Maybe this holds. Maybe this really is the floor. Common sense says it should be, but there's big extenuating circumstances at the moment. So if this goes down to 0.95 or 0.9 or 0.85, I think 0.8 would be disastrous. I don't see it getting any lower than that. But so if Bitcoin keeps going down and their premium goes below 0, there's a lot of room to the downside. So now this is no longer a leveraged trade on Bitcoin. This is not the risk reward on this has changed dramatically, in my opinion. So that's why I got out. I'm not telling you guys to get out because it's, there's two words in risk reward. The other one's reward. For those people that have patience, this thing at one point could go through the roof for all I know. I'd rather have my money in other places for whatever time is in the middle. And there's no guarantee that this happens anytime soon. Now, by the same token, Microstrategy is not going out of business. And when I say that, maybe 5 years from now it is, maybe 10 years from now it is, maybe 20 years from now it is. But unless you think that Bitcoin's going to zero, and I'm going to show an article of a very wealthy person that does think Bitcoin's going to zero, I think that's ridiculous. And Crypto Golfer is mentioning I'm in SATA. So that is a competing treasury company, Bitcoin treasury company. That's a much, much, much smaller company, but they're doing a 13% dividend based on $100 par. And theirs actually broke as well. After Strategy's broke, theirs broke, but Crypto Golfer's pointing out theirs is now back up to $87, whereas Strategy's is struggling in the low to mid 70s. So, those are, depending on, your risk appetite, the risk reward, you got to decide for yourself. But the risk reward on the common and the risk reward on the preferred on this, to me, are vastly different because you're getting that dividend. And now they could also, remember, the dividend is discretionary. They could go, well, the dividend's zero, but I can tell you this, if they do that, their preferred stock's going to zero immediately. So that, to me, that's not even on the table as a viable option. That's a catastrophic. That would be a catastrophic decision. I see somebody in the comments saying seller will make a move by Monday to fix this. MicroStrategy not touching it because Bitcoin ETFs IDCA in. Yeah, I mean, you've got the ETFs out there. If you're more comfortable, that's 1-to-1. It's not a mystery. It's not, there was a time. Here's the potential upside for Strategy. There was a time where this wasn't a 1.0, it was a 3. So it was trading at 3 times its asset value. It was trading at a monumental premium. I think those days are long gone. I do think in a bull market, this could easily get up to 1.5 times their net asset value. And so then you're going to get all the movement of Bitcoin and you're going to get it multiplied times 1.5. So, that's the concept potentially behind this, but there's no guarantees on any of this. The one thing on your if you're in an ETF, you're going to get 1-to-1 action on Bitcoin with an incredibly small, one of the smallest ETF fees in the entire market, no matter which Bitcoin ETF you choose. The fees are minuscule. So the last thing I wanted to show you, and I'm not sure, this is still not loading. So if it doesn't load, then I will just tell you about it. Why this is not loading. If you go to the prediction markets, Kelshi, I was on Poly Market. You can, I'm not going to say bet, you can predict. They have a prediction market as to whether or not Strategy is going to get a margin call between now and the end of the year. Right now, on Poly Market, that sits at 8%. Here's the thing. Strategy does not have any debt that requires a margin call. So now that there is a scenario, they could go out and get brand new debt, and for the first time, they could add debt secured by Bitcoin where there would be a margin call. But that debt does not exist. They do not have any debt that requires a margin call. Bitcoin could go to zero and they would not get a margin call right now. So for the prediction markets to be pricing in an 8% chance of a margin call, I think is due to a lack of information. And this is, I've talked about these prediction markets. And again, please, I'm not recommending you go make that bet either. None of this is financial advice. Look into all of this yourself, because understand, it is not impossible. It's unfathomable to me, but it is not impossible that MicroStrategy could get desperate, go borrow money with horrific terms. Bitcoin goes down and they get a margin call on debt that doesn't even exist yet. That's the scenario where that could be a yes. To put that at 8% is insanity, right? To me, that's like 0.1% chance of that happening, but it's not impossible. Strike. Is it strike, not stretch? Am I saying the wrong one? Their other one's stretch. You sure? Old Jock is letting me know. STRE, not stretch. I think it's strike. I think STRK is strike. Yeah, it's stretch. That's what I'm not sure. Isn't that what I've been saying? Stretch, STRC. If I've been calling it strike, then it's not strike. And neither of those are their official thing. The ticker is STRC, and you're right, Old Jock. That is stretch. So for whatever that's worth, if there was any confusion there, I'm not sure what I said going along, but STRC is the preferred stock that I'm talking about. That is the vehicle they've been using to buy Bitcoin for pretty much all year this year. They've got $10 billion, I believe, of this outstanding at this point. So it's not a small thing. Thank you, Old Jock, and thanks for being a member. So I think that's pretty much from soup to nuts everything I have to say about strategy, their common stock, their preferred stock, what's going on the prediction markets. So I did not buy any of this yet, but it is very tempting to me. This is at a 15% yield right now. And to me, if it goes down, then I can buy more, and it's at an even higher yield. So unless you think this will never return to par, or that it would be a multi-year investment, because now you're tying up money, right? You don't want to commit yourself to a 2 or 3 year investment if that's not what you want to do with your money. So that's what's going on. That's my take on this. I think that it is broken, right? This is at $74. This is drastically worse than the worst it's ever been. They are paying out dividends based on $100 par. It is likely they will increase their dividend monthly until this is fixed. So that's the mechanism by which to fix this. At some point, it's just too tempting for investors. They'll come in and buy this once they understand the full picture, in my opinion. But there's no telling the time frame on that. That's the deal. Let's go on to the next subject.
Put up a poll to see if there was a price that people would buy, and the price was that's winning is 65 to 75, 39%. 60. Oh, I put K 65 or lower. You guys knew what I meant. 37%. So no one's a real buy until it gets below 75. They're common stock, by the way.
That makes sense to me. I mean, you never know. It could bounce back tomorrow. But if you look, my next line's at $63, and I don't have a lot of confidence in that line. I would call that a very weak line of support, and the next one's somewhere around $45. I'm not saying it's going to those numbers because, like somebody said, you know, they can take action to correct this. So if they do something, this could turn around and get better fast. Alexander, to say that I wouldn't consider stretch would be a stretch.
Correct.
And Crypto Golfer saying stretch will be back to $100 by the end of the year. Bookmark this comment. I agree with you 100%, crypto golfer. There's no guarantee of that, but to me, I can't imagine this lasting until even close to the end of the year. Someone's going to wake up and go, wait a second, I can get, 15, 18, 20% on my money, plus my equity is going to increase because it's going to go back to par. At some point, this is going to be a no-brainer to people, I think. Sour Melon Gaming said, Tom, love you, but you're a madman. So he thinks Sour Melon Gaming would not get into this. Well, I got it half right for you, Sour Melon Gaming. I got out of my Microstrategy, but now I'm considering doubling down and buying their preferred stock. We'll see what happens. I understand this is not as straightforward. It feels like an absolute no-brainer to me, I will tell you, but nothing's ever that simple, and I'm going to think it over. I would suggest you guys think it over as well before you make any decisions. You want to see where people think the preferred stock's going to go, and then we'll let them vote on that while we move on to the next topic.
Where do you think it's preferred stock to go? I'm going to put how do you want me to rate it? Just what price points?
Yeah, it's at, say, 70, 65, 70, 60, 50, below 50. Because it's in the low 70s already. So those are really... Yeah, and Don's saying a 15% dividend is great right now. Where else are you getting 15%? I'm not saying there's nowhere, but this is kind of feels like money in the bank. Other than you're buying into a system that is clearly, at the moment, broken. And Sour Melon Gaming says, Saylor has lost money for investors ever since he started, and people still support him. It baffles me. To me, this isn't, I understand. I know there's a little bit of a cult of personality built around Michael Saylor, and to me, it's not as much about Michael Saylor as it is they have a formula. Now, I will tell you, for those who are members, there's a company that does this with Ethereum. And while my conviction in Bitcoin is significantly higher than my conviction in Ethereum, the company that does this in Ethereum, my conviction in that company is significantly higher, and I'm going to tell you what that company is right now, is significantly higher than my conviction in Strategy, formerly Microstrategy. And I'm going to tell you what it is and why. Bitmine Immersion Technology, stock ticker BMNR. This is trading at $13.56. I'm just going to go to the chart to show you what's been going on with this because Bitmine. This is a much newer company. This company was founded and owned by Tom Lee, who a lot of you probably know from his many, many appearances on TV.
Never met him, Tom.
Never met him. I never met him either. No, of him, I should say. So you can see this started in October 2025 when cryptocurrency was roaring. So it is down from its peak since October. This stock's down about 75%. So this has taken it on the chin big time. But it's buying Ethereum, and Ethereum's been getting beat up badly. So there's a difference. What this company is doing, unlike Strategy, which their plan is to accumulate Bitcoin forever. So they're going to raise money, buy Bitcoin, raise money, buy Bitcoin. The principle being Bitcoin's going to appreciate over time at some point dramatically, and everyone's going to make a lot of money. Bitmine has a different formula. They are looking to accumulate 5% of the world's supply of Ethereum. At that time, they're going to stop. So they will need to raise no more money, no more cash demands on this company. They have over 5 million Ethereum right now. They have 4.7% of the world's float of Ethereum. So they're almost at their goal. Shortly, certainly by the end of the year or before, this company will be done buying Ethereum. It's staking Ethereum, and it's doing other things to generate profit. With that profit, it can do a few things. It can pay dividends to the shareholders. What I think is much more likely is it can buy back shares of its stock. So now, as a stockholder, every single share of your stock becomes a bigger piece of the pie with every single share of the stock that they buy back. So I think they're likely to take some amount of their proceeds, which will be immense, and buy their own stock back, particularly until it gets back to, highs. While it's very low, down 75% like this is when companies want to start buying their stock back. When it hits all-time highs, maybe not so much. So either way, there's no preferred stock, there's no debt coming, none of that is happening because they're going to be done doing what they're doing. And then from that point, this just becomes a cash-generating machine. Now, like I said, their underlying asset is Ethereum. I'm not as bullish on Ethereum as I am on Bitcoin. But I do think a rising tide lifts all boats, and we know that eventually, if crypto spring is not here, when it gets here, Ethereum's the second biggest cryptocurrency in the world. And it's probably going to double or triple or quadruple. It's got to do all those things, and that still would be less by far than the previous cycles. That's just to get back to where it was in the last cycle. And Ethereum did not behave as well in the last cycle by far as Bitcoin did. But even if this company only, if Ethereum only doubles, they still have 5 million Ethereum that's staked, that's making money. This company's raking in profits. So I think this formula as a company is a much, much better formula. That's just my opinion. Right? I'm sure some people like the other formula better. So let me just go to Bitmine added 92 million Ethereum with Tom Lee continuing to believe in crypto spring. So Tom Lee believes crypto spring is already here. I'm going to show you a bunch of people that disagree with him strenuously. The word on the street right now is FUD, FUD, FUD. Most of the articles out there are about how indicators are saying we're going lower, we're going much lower. It's the end of the world. I got one billionaire out there saying Bitcoin's worth nothing. We'll get to that article later.
I mean, in theory, he's right.
Well, everything's worth nothing in theory then.
Yeah. So send me your money. It's worth nothing.
Here's what's worth something. Time. Your time. Your time, your health. Everything beyond that is subjective. Price to be determined by the market. And Gambit here saying the problem with Tom Lee's plan is he's too close to finishing up buying. Where's the price support for Ethereum going to come from now? So under the premise that he's bought 5 million Ethereum, once he stops buying Ethereum, one of the big buyers is going to be out of the market. So that's true. But this company's brand new. It didn't exist at all until a little while ago. And Ethereum went on just fine to become the second largest cryptocurrency in the world before Tom Lee ever thought. And remember, Tom Lee was a big Bitcoin guy, and he still is incredibly bullish on Bitcoin. But he set up this company to be an Ethereum treasury company. So he's very bullish on both. He's bullish on the big cryptocurrencies. He thinks crypto winter is over, crypto spring is here, and big moves are about to come. But it's a valid point that one of the big buyers is almost done buying. But there are ETFs out there. There's institutional buyers. And in the past, remember, all we've ever had in all the previous cycles was just enthusiastic retail buyers. And that made the run up in all the previous cycles. So okay, so I will tell you here, I am taking more risk than this. I'm going to show you what I have been buying. And again, this is not financial advice. This is a much higher level of risk. And so please do your own due diligence, make your own decisions. If you're not risk tolerant, if you're risk averse, all of this stuff is a nightmare. I mean, just look at what happened this week. The volatility is absolutely unbelievable, and it's contagious. It's spread to AI. It's spreading to the whole market. The market is different than it used to be. And you can't do what you did 10 years ago, 20 years ago, 30 years ago in the market. It doesn't work anymore. So with that said, I will show you what I have been buying. This is T-Rex 2X. This is long Bitmine, 2X long Bitmine. So this is a leveraged ETF on Bitmine. Stock ticker BMNU. This is now down to $69. Or sorry, 69 cents. At one point in the day today, this was down to 63 cents. And I'm going to go show you right, this thing is winding down to zero. This was let me just put the line in.
I'm laughing because I pulled up any.
Yeah, see?
It's freaking 9 lives. I'm freaking 9 lives.
Well, they've reverse split their way into oblivion. This was $42. I don't know why it's not getting me into here. $42 and what was it? $42.56. Let me get the right number up there. So this debuted September 26th. Now remember, this was in the run-up in the early October. All the cryptocurrency hit their highs for this cycle. So this came out right during the run-up. It ran up to $42.56. So I'm not proposing that it will get back there. But just so that you understand, that would be a 5,800% increase to get back to where it was in October. Okay, that's pie in the sky. To get back to where it was in December after it had crashed, right? This had already crashed by December. This was already down 71%. So if it gets back there during the crypto bull market, this is a 1,600% move to the upside. That's a 16x. So could this 5x, 10x, 15x, 20x, 40x? The risk reward on this is immense because look how drastically this falls when Ethereum's not doing well. Right? This could be going, if Ethereum hits their lows from the previous bull market or the previous crypto winter, this could be at 15 cents. So you got to be willing to take a lot of pain. And you have to believe that Ethereum is going to have a bull market at some point in the not too distant future. Right? If you think we're 2 years away from a bull market for Ethereum, I would not be into either one of these stocks.
I mean, I can see 5,000 for it. I can't see 10.
From a bull. If this gets to 5,000, this thing will likely 50x.
Are you kidding me?
Right.
50x?
That's what I'm saying. So but it depends how far down it goes between now and then. You know, maybe it'll only 30x in that scenario. Maybe it'll only 25x in that scenario. Because these 2x leverages are 2x per day. So there's a compounding effect that makes this worse on the way down than it is on the way up. But, right.
I think you take some pain. And listen, I haven't even started talking properly because we have 1, 2, 3, 4, 5, 6, 7, 8 days till the 4th of July. And America will be celebrating America 250. And I said the second half of this year was going to be amazing. It's still going to be amazing. It's just the end of the first half, and this is why it's sucking.
Well, you said
that's what's still going on.
Your call from December of 2025 was the first 6 months of this year were going to be
hell. Rocky road.
You had a bunch of words for it, and none of them were good.
Right, and I think that we're about ready to turn the corner. I think there's a song. I think it was a show called Happy Days.
Yeah, there was a little show called Happy Days that was the #1 show on TV, and then its spinoff Laverne and Shirley was like the #1 show on TV for years.
Michael Anthony said the U.S. Navy did strike after market close, and that's actually good for the market. I don't know if you know that. It's sad, but it is.
Let's go to.
If the war starts up, so does the stock market. So does crypto.
So crude's up. It was at 69 at the close. It's at 70 right now. So there was a little bump. Now, 70 is still very low. I'm going to go to the oil chart real quick just to sidetrack ourselves because
you got to understand. Listen, this whole war thing right now, someone is saying, hey, listen, can you do me a favor? Can you bomb a boat? Because there's just no demand for oil, and we got to do something to keep the prices up. Well, listen, I'll give you what you know that's what's going on. Someone is calling someone and saying, hey, want some chicken tonight?
This is a George opinion. I'm not saying I disagree with it.
I don't know it to be true. I'm just saying it just seems like when the oil goes really stupid low, then all of a sudden someone bombs something.
Here's the way I'm looking at it. Even with that, I made this area when we got into this conflict. We finally are now trading for days and days inside of what I think were just fine. We've traded between $60 and $75 on oil. That's extremely normal territory. And I'm going to go to the 3-day and just zoom out a little. Look, this is years. This is from August of 2024 to right before the war, February of 2026. We traded inside of this range for 90% of the time. By the way, this thing we were doing before that was trading above this range. There was no war. We had oil at $94. Oh, that's bad. In 2022, we had oil at $129. This range is business as usual. Yes, the absolute sweet spot for oil is more like $55 to $60. That's the home run sweet spot. But $60 to $75 is, for all intents and purposes, business as usual. Now, this could spike up again. Who knows? If things get dramatically worse, this could get worse. But I'm keeping my eye on this because inflation data will correspond to this. And the fact that this is happening means the next inflation number is going to be lower. So, reports of massive inflation, we're going to get to the Fed and what they're going to do and what inflation's going to do in one or two topics from now. But this is the key driver. And this is why we had some hot inflation numbers, some hot CPI numbers. We got a PCE number that we're going to talk about that came in, by the way, exactly as expected. And the market then priced in the end of the world. So, not rational. We'll look at that in more detail, and I'll show you exactly what I mean by that. But to me, I think oil is getting healthy. It's going to bounce around. We could go back up into these numbers, depending on whether or not that conflict heats up or not. And none of us here know what the answer to that is. I'm sure we all hope it ends now, but that may or may not be the case. Sarmillion Gaming is saying the war may never end. We have a bunch of immature world leaders that all want to be the biggest and the baddest. I think, we don't know the future. Even, there is likely an end to what we're calling the war. Does that mean that there's not strained tensions? Well, there's been strained tensions in the Middle East for like 4,000 years. So you're right. That's probably not going anywhere anytime soon. But as long as oil is flowing and moving, then it's not going to affect the price of oil. It's not going to affect the economy. And remember, oil is freight, and freight is in every single thing that you buy. So these CPI numbers are I think misleading. Now, if oil is going to be at $100 from now on, then they're not misleading because then that'll be the new norm. But if oil is going to be between $60 and $75, you're going to see a 1 or 2 month lag. You're going to see CPI come back down. Everybody will stop panicking. That's what I think is going to happen. That's my opinion. So we'll see. We don't know. I don't know. Nobody knows. All we can do is hope for the best. And smash the like button. If you would be so kind to hit the like button. Where are we at, George? We get anybody hitting the like button?
Well, I'm on your account, so I got to log into the other account in order to see, because your account doesn't show it.
Yeah, I don't get to see that number. It's not right. Well, I hope we're getting some likes. It's much appreciated. It does help the stream in real time and later. So if you like this content at all, or if you're willing to,
honest, it's kind of pissing me off.
What do you got?
It just sucks that we're in this situation where we're at with everything.
Oh, you're saying the world is pissing you off.
Yeah.
These are strange days. And I don't know what to say. Things move at warp speed. We've got information coming at us in different. Go ahead.
We got 80 likes.
We got 80 likes. All right. We're trying for 150. We're more than halfway there. So much appreciated. Thank you very much to everybody that has smashed the like button. The news cycle moves fast. Information comes from every direction at us 24 hours a day, 7 days a week. Everything feels a lot heavier than it is, in my opinion. But it can be unbelievably overwhelming. On top of all of that, if you are an investor and you're managing your own portfolio, that is a super stressful thing to do on top of all of that. So pile that into the mix, especially when there's a rough week like this week where, it was minute to minute. There were 15-minute periods where my portfolio was taking like 10% swings. As a portfolio, it's unthinkable. So now you know, everyone's portfolio is different. Doug is asking, what else are you buying? You only gave one. So next thing I will do is give the list of some of the stuff that I bought, and I'll show you what happened to it. I made a chart for that. And we will talk about Hive. They had an announcement. They did once again, they borrowed money, their stock tanked, and it's already recovered. So anybody that bought the dip was immediately rewarded, as is almost always the case, particularly in this industry. So we've talked about that on the members only stream. We've gone through that trade time after time. It worked again with Hive, and Hive finished the day up. Where are they at? Where are you, Hive? You're hiding on me. Up 6.33% today to $4.03. There's still a lot of room left to the upside on that, in my opinion. Okay, and we'll get to they had a press release, and they did raise some capital. And we know, listen, with these companies that are moving into, first of all, they start out as a Bitcoin miner. We know that's a capital intensive industry. Now they're becoming power companies that are building data centers. That's capital intensive. We know these companies are going to raise money. So every time they raise some money and the market penalizes them immediately on that day for it disproportionately, I view that always as a buying opportunity. Again, that's not financial advice, and nothing works every single time. I can show you an example of one recently that didn't work, but we predicted it wasn't going to work because there was some different fundamentals at play, and that turned out to be the disaster we expected it to be. So you got to be careful, and you got to know what you're buying. You got to understand the stocks that you're investing in. All right, where were we, George?
We're getting ready to talk about Hive. Did you talk about Hive?
You want to?
And then what are you purchasing, Tom? Everybody's asking that question. Are you purchasing?
Well, let me go to the chart. This is what I did yesterday. So I sold Microstrategy or Strategy 2 days ago. I spent half that money 2 days ago. I'll disclose that list to the members only on Tuesday. I spent the other half of it yesterday, and I'll let everybody know what that was on. And this is how erratic the market is. Let me bring up the list. I don't know if you guys can read these numbers. Should I make this bigger? Okay. This is first, Microsoft. Yes, believe it or not, I am in one of the Mag 7, which they're now calling the Mag 8, and they'll soon be calling the Mag 10, I think. Microsoft is getting sold off like a garbage software company that's going out of business. It is, to me, it's absurd. It makes no sense. It's way off of its highs, and I'm just, as I show you guys these, we'll take a quick look at them. Now, understand, this is a little bit more of the conservative side of my portfolio. This isn't going to 2x, 5x, 10x, 50x. And by the way, somebody had mentioned, I don't think that thing's going to 58x. I don't think so either. I don't think so. That's not my investment thesis. But I think when you look at where it's come from, if Ethereum recovers, I think it could very easily 5x or 10x or maybe even do better than that. And to me, that's about as much of a grand slam home run as you can hope for, right? If you get a 5 to 15x on something, you're right. It's highly unlikely it's going to 50 or 60x. Having said that, SanDisk is up 8,000% in the last 15 months. So it does happen. Like I said, it's a different market. This is not your father's market. Microsoft, from its highs in October, right? When I bought it yesterday, it was down 36%. Microsoft's done nothing wrong except for the narrative that it's a software company and AI is replacing software. Now, with Microsoft, they get punished twice, not once, but twice. They get punished as a software company. All software companies have been, I shouldn't say all, the majority of software companies have been decimated. We're going to look at a bunch of them right now. So they're getting punished as a software company, but they are also an AI play. Not the kinds of AI plays that are going through the roof. They're the ones spending money. They're the CapEx guys. So Google, Microsoft, Amazon, Meta, they're spending hundreds of billions of dollars a year. That's not an exaggeration. And it's magnitudes more than their normal CapEx spending. So people are punishing them for that as well. Now, if AI turns out to be nothing, then they've wasted all that money. But again, to me, when a company raises money and builds infrastructure, if it's a management I trust, a company I know, Microsoft is only the company that for half of the last 50 years has been the number one largest company in the world from a market cap standpoint. So somebody over there must know something about what they're doing. And they're down. They're just way down. So yeah, this is not going to be, this one to me is where I park my money. I could put this in the bank and keep it on the sidelines, but I think the chances of upside on this are very, very high. This pulled back, in my opinion, for no reason. This is still, after all these years, this is a high growth company. They have a lot of money. They have massive cash flow. Yes, they're spending it on CapEx in the short term because there is a shift in technology that the world has to keep up with. So agree or disagree, I bought Microsoft. So far, it's going okay for me. I'm up 6.4% in one day. That's on the fourth biggest company in the world. Remember, those companies don't usually do those type of moves. So it was down yesterday. It was ridiculous. The next one, Intuit. I've talked about this stock before. This is TurboTax. But what a lot of people don't know is behind TurboTax, and a lot of you I'm sure do know, there's QuickBooks. So if you think AI is going to get rid of QuickBooks, then I would sell into it. But I doubt it. So into it, if you think Microsoft's been punished, right? So on July of 2025, this stock was over $800. When I bought it yesterday, it was down almost 70% in 9 months. Well, actually a year. So Intuit down. Now, by the way, they just had their best quarter they've ever had in the history of their company. So do your own due diligence. Don't take my word for it. Go take a look at their financials. Go take a look at their forecasts. The narrative here is, yeah, but people aren't going to need to use TurboTax anymore. So, one of the four, this is a strange company. It has 3 quarters of, there's 4 quarterly earnings. They have 3 what I would call regular earnings. Once a year, all of TurboTax, it's all stuffed into one quarter basically. And that quarter is huge. So TurboTax was a little bit flat year over year. The company still it minted money. It made a massive amount of money. It either matched or beat on earnings and revenue and its forecast, and the stock, which had already been tanking for months, took another giant leg down. So I started buying into this stock. on earnings day, and I can show you, and it's probably pretty obvious to all of you which day that is. That's a 20% move to the downside on a stock that had already been destroyed. In 2 days, from the top to the bottom, that's 28% in 2 days. So, and remember, this was already down from $800. It was already trading at around $400. Now it's in the 200s. It's continued to go down from there, right? It had a quick return, and then, it's down another 26% from there. So, for you guys to decide, but to me, like, this is crazy time. This goes back, you got to go back to 2020, right? You got to go back, and this was an event which I cannot name on the stream, or they will cut us. But we all remember what happened in March of 2020. So I don't even count this. You really have to go back to 2019. It's 2026 right now. So this just lost 7 years in the last, 1 year. So decide for yourself. Check out the financials, understand what's going on here and what the risk is. There is risk. Maybe everybody's right. Maybe AI just ends the world of software. I use AI extensively, and I have yet to see, it's unbelievably productive. I've yet to see an instance where I'm going to replace my existing software that I use with AI. And I'm not saying there's no existence anywhere in the entire software world. I'm just saying there's certain software that actually go very well hand in hand. And a lot of these companies, so with a big fear, the immediate SaaS apocalypse, software as a service apocalypse, which is a term everybody was throwing around, the theory was, well, companies are going to be able to lay off half their employees because they're just going to have AI agents, even though they'll still use QuickBooks. They'll have an AI agent that does all the work. So no more pay, you pay per seat. If the seats are cut in half, the revenue's cut in half. Well, these software companies aren't stupid. They're charging by transaction now. So they don't care if a person does a transaction. They don't care if a AI agent does the transaction. They are all moving, the companies that I'm talking about are moving their model towards, usage versus number of licenses. So that's the old model. This is the new model. I think you're going to see, to me, in my opinion, Intuit's one of the ones that's going to adapt. I think this is highly likely, yet I think the other two that I'm going to show you, I think are much more likely to not only survive, but thrive in the AI environment. So if we go back to what I bought, so that's Intuit. That was up 5% today, 5.2% from the price that I bought it yesterday. This is the price I bought it at. That's not yesterday's closing price. Some of these got even lower than after I bought them. So, but I'm just going from where I bought it. So I'm up 5% on that. CRM, Salesforce. I'm up 5.8% in 1 day on that one since I bought it. Now we're getting to a position. This is a big position for me. So this was not my first purchase, and none of these was my first purchase. I'm adding to my already existing positions. This position is very close to cracking. It's in the top 10. It's in the top 10. It's working its way towards the top 5. This is another stock that has been, to me, this is left for dead. In January of 2025, now that's a year and a half ago. Okay, so that's a little bit of time. You're talking 18 months. until the bottom a few days ago, Salesforce is down 60%. If there were two stocks that I think are going to not only survive AI, but are going to actually increase their profitability because of AI, this is one of them. So that's my opinion. You guys can make up your own opinion. I have been building this out for quite some time, and I keep getting more buying opportunities. So I'm going to keep, if this goes down more, I'll buy more. So it went down. It dipped yesterday. Right? It was down here, getting close to its recent all-time lows. And again, you got to go back to 2023. And this is a high-growth company. This is a highly successful high-growth company. Now, maybe you think AI changes everything and they're going to fail at what they do. If so, I would stay away from it. But to me, this is one of my big positions. And so is the next one. ServiceNow. I bought it at $89.87. It went under $90 yesterday. It's up 9.4% from where I bought this yesterday afternoon. When I saw that under 90, I couldn't believe my eyes. That doesn't mean that the next move isn't lower. But this is another one. This is a top 10 position for me. It's behind Salesforce. I'd like it to catch up because I have actually just as much conviction in ServiceNow as I do in Salesforce. These are two of my personal high conviction plays. Again, not financial advice. I'm not telling you guys what to do, but this is what I'm doing. And you can see, like, it got down to my little line here. This is at $88. It got down to $89. And I've been trying to accumulate as much as I can of this. When it got under 100, I thought that was a gift. And then it got under 90. I can't believe it. Right? This was $140 this month. That means it was down $50 from the monthly high. This was down 36% this month. And by the way, from the highs, this is another one. From the high to the low, down 65%. They're another one. Their quarterly earnings, I'd have to go back and look, but they either matched or beat on revenue, and they either matched or beat on profit, and they raised guidance, and the stock plummeted. I mean, what is it that you want them to do on their earnings call other than beat, and raise? Now, you could go, well, it's a sell the news situation. This stock just ran up 40%, so they beat, and raise, but they didn't quite hit the whisper number, so it was a sell the news. No, this stock's already been sold until it's blue in the face. It's down 65%. They've thrown this stock in the garbage. So if you think it's garbage, then don't buy it. I think this stock has, and again, to me, these are I have low risk, like Microsoft. To me, that's a very low risk, low reward stock. So I got some of those. To me, this is, I still think this is I would call this a low to medium risk and a medium reward, right? This could easily double. That's going up 100%. That's a and I'm not talking about over a 5-year period. For most stocks, that's a grand slam home run, but that's not even in my high risk pile. You guys know we look at a lot of very high risk stocks where if you're going to take that level of risk, you're looking for a 3x or a 4x or a 5x or sometimes more, right? At one point, my IREN was up over 1,000%. Now it's pulled back. That was a 10x. It's pulled back to, a 7x or something like that. And it's Well, I'm going to talk about IREN. I think IREN's being manipulated, and to me, we should do a what's the best stock to buy, because I'll tell you right now, IREN's my number one stock that I think is underpriced out of the 12 stocks that we follow.
12? We follow 12?
I think it's 12. I mean, we talk about hundreds of stocks, but the 12 we chart, and I'll get to that chart next. Where do you think the preferred price is going? So we'll end this, but thank you everybody for participating. 94 votes. 30. So in first place, they think that Stretch, Microstrategy, or Strategy's preferred stock is going to get down to between $50 and $60. So at $50, that's a 25% yield. And if they raise the dividend, which is highly likely next week, it could be a 30% yield. I just think people are going to move in. That now becomes a risk reward scenario where you go, I'll take my 30% yield and see what happens.
Give me 4 stocks. IREN.
First group can be IREN, Marathon, BitDR, Cores. And we'll do a little round robin, and we'll see where it goes. I do think the market this week...
Vote quick.
Go ahead.
Vote quick, please.
Oh, vote quick, because we got to do a round robin and go around and around. I will show you guys what these stocks did this week, what they've done for the month of June, which is almost over, and what they've done year to date. This week was, if you owned the list of stocks we're going to look at this week, It was dizzying. That's all I can tell you. It was all I could do to maintain my composure and be methodical about what I bought and sold. And I feel like I accomplished that, but it didn't feel that way in the moment. Every moment felt like chaos. I'm watching things, I'm in pre-market. We got 3 minutes until the market opens, and every single stock is way up in the green. 10 minutes later, my portfolio's an absolute train wreck. Right? That's a roller coaster ride. And that was 3 days in a row. But I think I was able to make quality decisions that stayed on plan. And that's a big part of having a plan. Right? If I didn't have that plan drilled into my head, who knows what I would have done with some of these ridiculous moves that happened in 10 or 15 or 20 minutes or a half an hour, day after day after day. So let's go take a look. Day after day. Whoa, this is too big. Okay. Not our finest week. This is what happened this week. So, if you guys remember, last Friday in the United States was a holiday. The market was closed. So this is actually from the close of last Thursday to the close of this Friday, but that's still only 5 trading days. That's this week. Bitcoin, as always in gold, down 5%. Not a good week for Bitcoin. To say we're testing 60,000 is an understatement. In fact,
he's right, Tom.
Huh?
I waited. I was right. You were wrong.
Why, it went under 60?
Yeah.
Well,
with the 58,500 I saw.
You can see on the 15-minute time frame, it went under 60. It went under 59. It went under 59. It went under 59. This is what I'm saying. This was a brutal week. However, each day, it bounced off of 60. It got over 60. It got over 60. I want to go to the 1-day chart. And let's get rid of... Come on. Hold on. I don't want to leave anywhere. Got to get rid of these because they're showing up on the 1-day and confusing things. On the 1-day chart, we did have a meaningful event yesterday. Yesterday closed under this line is $60,200, but yesterday did close under $60,000. It closed at $59,703. So that support at $60,000, all these days prior that candle wicked, these 2 days, this day, we ran back up over 60 quite easily before the end of the day. Yesterday, we did not. Today, I mean, we're at $59,820. It's a roll of the dice if we're going to finish over 60,000. But I fear when you look at the 15-minute, right? Boom, boom, boom. This is starting to look like there's the potential that what has been massive long-term support might be turning into resistance. The 15-minute time frame is no time frame to make that type of a decision on. We closed incredibly close to this line of support. And again, these technicals are more of an art than a science. So being ever so slightly below, if we close somewhere in this area, then we're still sitting here. We're only $200 below the line. What I would say is, you know, if Monday we have a red candle and we close down here, now you're starting to say this, we've broken this line and now we got to prove that we can get back above it. If we do have one of these days, to me, it would be incumbent upon the very next day to get back over this line, because we have fake outs all the time. So we could have a fake out, but a fake out fixes itself fast. So early next week, by next Tuesday or Wednesday, I think it's going to be crystal clear to us whether we manage to hold on to this $60,000 line as we have so many times, or if we lost it and we got this stuff coming at us. Right? You'll hear a lot of people talking about 54,000. My line's at about 53,500. I have been very clear. My opinion's been that 60,000 was going to hold. Confidence was high here. Confidence was high here. My confidence was high 2 days ago. My confidence is not as high today. It is starting to look like we're forming a legitimate chance at running down to like $54,000. I'm not saying that's a done deal, but I really had high conviction that 60 would hold, and it did for a long time, but we could be losing it right now. Now at 59,800, you know, it's really not time to say we lost 60,000, but by Monday, it could look like a different story. So that's what I would be watching. Do we hang out, you know, anywhere from 59 to 60,000? If we're hanging out there, then I think we're holding the line. If we start dropping and closing in the 58s and the 57s, then we have clearly lost 60,000. And then I think 54,000 is the next most likely scenario. My line's at 53,500. So, you know, again, this is more of an art than a science, but somewhere in there. So I'm not going to be shocked. And like we've talked about all along, none of these results are shocking. This is Bitcoin. It's highly volatile. So, you know, we can have a thesis. We can think one thing is going to happen, but when something else happens that's well within the realm of what's happened in the past, we can't be shocked. And we got to be prepared.
This next poll is an interesting one.
Who won the last one?
I didn't even see.
Landslide.
IREN took without a question, without I knew that was going to happen.
IREN in a landslide, BitDeer in second, but not even.
The next one's a good poll, though.
So
Cleanspark, Hut, Riot, and Hive.
Oh, my. You put some heavy hitters in there.
Yeah.
And what's funny is the stock that's been I think the most consistent lately, I bet you is going to come in last place in this vote. I don't know why it's been so strong, but I don't want to say until the vote's over, and then we'll talk about that.
I got to run, Tom. That's why I wanted to get going with that poll.
Oh, all right, George. I'll keep it going from here. Thanks so much. Have a great weekend,
Thanks,
George.
everybody. We made it to 100. We're getting like 105 now.
All right. Thank you, everybody, for smashing the like button. If you just got here or if you haven't, it still does help us if you smash the like button. It is much appreciated. Let's keep going. So while you guys are voting, I'm going to keep going through what happened this week. So, all right. Microstrategy. Strategy. Down 27%. Bitcoin down 5%. We talked about this. This has come, for those of you who got here late, we spent a considerable amount of time talking about strategy, their common stock, their preferred stock. So if you're interested, you can go back and take a look at that later. But there's a reason this is down 27%. This came unglued, and you can see it. IREN is down 21%. It is my opinion that there is no reason for IREN to be down 21%. I have a sneaking suspicion, and I do think there's a manipulation in play specifically on IREN, because I have a short-term price target of $75 on IREN. If we look at the chart, just go take a quick look at the chart. So we got up to, in October of 2025, that was a long time ago, right? That's when everything was roaring. We got up to $75. In November of 2025, we got up to $75. In January of 2026, we got up to $63. Not quite as close. We got up to $65 in May. Here, where it looks like we got to $70, we actually almost touched this green line after hours. After hours does not show up on the charts, so you won't see that, but we did pretty much hit this line after hours. Subsequent to that, for no particular reason that I can figure out, IREN's down 34%. It broke its line of support. If you look down on the RSI, I'm not sure how well you guys can see that. I'll make it big. It was holding this line, and then it did dip below a little bit, and now we've broken this line. So now I think you got to look at, or even something like this. We could go all the way and retest all the way down to 30, which is oversold territory. Now, in cryptocurrency and volatile stocks, you can get a lot lower than 30, which is generally considered oversold, and you can get a lot higher than 70, which is considered overbought. As you can see, IREN just got up to 88 in July of 2025. It got up to 84 in October of 2025. So over 80 is nothing unusual for these stocks, but this has broken. I don't know how far it's going to go. I was going to buy options on IREN, and I actually bought options on Bitcoin instead. So I may still add some relatively short-term, due September type options, because I think this stock is due to have a big pop. Let's get off of the RSI and look at the stock. I mean, I think this is artificial. That's my opinion, and only time will tell. But I certainly wouldn't be surprised. I've got a line here at like $43. That's a little lower. It's been, it tested $30 in March. Now, March, everything hit super lows. I don't think we're moving into that environment. So I don't think this is in play, but you never know. It was just there. So I think we're more likely to bounce off of this. And then I do think wherever we go in the middle, my price target for the next 120 days is $75. So that's my personal opinion. We'll see what happens. So that was the second worst performer on the week by far. In third last place, ABTC. This is the only remaining pure play Bitcoin miner. Bitcoin is not doing well, and ABTC is not doing well. That's been going on all year. No surprise there. The shocker on this list is ABTC and Strategy have been in second last and last place like week after week and month after month. And IREN has snuck in here and had this big pullback. Wolf and CIFR are having a fairly substantial pullback, all things considered. Down both 11% this week. Most of the rest of this was within striking distance of what Bitcoin itself did. There were two in the green. This feels like it's 2021. Marathon and Riot leading the pack. All right, we haven't said that in years, but they're in two very different places, and I just want to take a look at that for a second. Marathon for about 3 years was the largest Bitcoin miner. It was the largest out of all these stocks by market cap, and for most of that period, it wasn't even close. Now, it is not the largest. It's not the second largest. It's not even in the top 5. Almost everybody has passed them in market cap. Marathon now has a $5.5 billion market cap. That's after being up 4.76% today. Riot, right? These traded kind of hand in hand for years and years, and there wasn't a lot of other options. All these other options have come in over the years. Riot is at $28. Right? Marathon was at 14. Riot is double the stock price, but more importantly, it's double the market cap of Marathon. At one point, Marathon was double the market cap of Riot. So these two companies have headed in opposite directions. It's the one on this list that I thought was going to come in last place, but it looks like it's going to come in second last. Riot has very quietly been performing incredibly well as a stock. So you can see even things like CIFR, $10 billion market cap. That's double Marathon, right? Marathon was 20 times the market cap CIFR was 3 years ago. And now CIFR's double Marathon. So where everyone else has done their thing, Marathon's been left behind a little bit. Now, it's either due for a big run or they're failing. So that's what you got to decide. They have made several plays. They purchased a big power facility, data center. They're just about the last ones in, but they are in. They have big plans. We'll see if they can execute. I do think it's in the back of a lot of investors' minds that Marathon has had more than one time where they had a lot of difficulty executing, particularly at the build-out phase. So we'll see if they pop. I think if they start getting contracts, any of these companies that get contracts, I think they will get big pops on that, especially if they're sizable contracts. The contracts that these guys should be getting should be in the billions, right? Even $1 billion is fine. $1 billion, $3 billion, and that's not per year. A lot of these are 5-year contracts, 10-year contracts, 15-year contracts, but they should be multi-billion-dollar contracts. As far as I can tell, the company out of all of these that has by far the largest annual run rate for the next 12 months is IREN. So if you look, like for instance, CIFR, which is now a $10 billion stock, twice Marathon, if you look, they're expecting, this is a big jump, but they're expecting to go from 223 million last year, 235 million this year, pretty flat because their infrastructure and their AI deals haven't kicked in yet. But next year, they're looking to jump to $876 million. That's a nice jump. They're a $10 billion market cap company off of that. By the way, 6 cents. They're looking like they're going to lose money this year and then maybe make less than $1 a share. So, you know, at 25, 26 bucks, this was a $30 stock last week. And their forward earnings are 67 cents. So that's a pretty big PE. But when you're growing 200 or 300%, you're an ultra high growth company, and they could continue growing at this rate if they build out the way they say they're going to build out and if the contracts come in. But just to contrast, like, these are the companies that are ahead of the game. I'm going to go to TeraWulf. This is a $26 stock. This was at $30 last week. This is a $12 billion market cap, way more, almost $13 billion. Multiples larger than Marathon. And if I look at their analysis, and you can dig a lot deeper than this, but this is a very good shortcut. If you're buying these stocks, I recommend taking one step further, reading their 10Ks, 10Qs, that kind of stuff. Last year's sales, 168 million. This year's sales, 319 million. They actually have some AI revenue coming in. But, you know, this 168 million was Bitcoin. That's a closed segment of their business. TeraWulf's not in the Bitcoin mining industry anymore. Several of these companies are no longer interested in mining Bitcoin. They may still have some operations active. They'll be winding them down. Some of them have already given specific time frames from when they'll end. Some of them have talked more generally. Next year, $1 billion of revenue. So that's a 90% growth because some of their AI revenue is kicking in this year, and 216% growth next year. So you can see these are uber high growth stocks. So these don't necessarily get traded on price earnings. Right? When you're in this build out phase and growth phase, there's massive amount of CapEx. There's a lot of depreciation. But if you've got a business model where you're pulling in 5-year contracts, 10-year contracts, 15-year contracts, you've got line of sight on your revenue, and profitability will follow. So, you know, if your compound annual growth rate is going to be 200%, let's say it's 150% for a 5-year period. That is through the roof. That is an ultra high growth company. So that's why they trade on the, you know, seemingly strange multiples. Now I'm going to go to IREN. IREN's a $16 billion, 16.8, almost 17 billion. So it is bigger than the other two. Not by that much, right? TeraWulf is a $13 billion company. This is just under a $17 billion company. They're in the same neighborhood. Analysis. Last year, they had $500 million of revenue. That was all Bitcoin revenue. That's how much bigger of a Bitcoin miner they are than all these other companies. So they started from a much, much higher place. This year, they're looking at 742 million in revenue. So again, they're starting in a much higher place than everybody else. But this still is not AI kicking in for the most part. It's trickling in. Next year, they're looking from this much higher starting point. They're looking at 310% growth. They're looking at $3 billion of revenue. That's triple TeraWulf. It's quadruple CIFR. These guys are ahead of everybody else that we look at. Even, this is the one that really surprises me. Core Scientific was the first mover in this space, period. Now, behind the scenes, IREN's been talking their data center book for years. They haven't been getting contracts, but they have been, this was the plan. I've actually complained about it 3 years ago, and they were right, and I was wrong. And specifically, they started a conference call out by saying they're not a Bitcoin mining company. And there's some companies that do this, and it frustrates me. 100% in that quarter, 100% of their revenue came from Bitcoin mining. But they start their conference call by saying we're not a Bitcoin mining company. So to me, that sets me in the wrong direction automatically. What they were trying to say, well, they were saying it, and they were hoping people would listen. They said, we are experts at building data centers. We are a data center company. We happen to be using those data centers currently to mine Bitcoin because that's where we can make the most money. But what we know how to do is build data centers. Ours are better than everybody else's. This is our area of expertise. This is what we do. Well, that paid off for them because you can see they now have a partnership with Microsoft. They now have a partnership with NVIDIA, and they have sales contracts from those two companies. Beyond that, they have a partnership with NVIDIA to build out 5 gigawatts of power. That's going to 10x this revenue number at least. Now, that's a multi-year goal, so that's not going to happen overnight. But my point is, that's why I think that $75 price target makes more sense. This stock has pulled back for reasons unknown to me. It's not based on fundamentals. It's not based on forward projections. Core Scientific. This is an $8.6 billion company. Now, granted, this company had to go through bankruptcy, come out the other side. It's been one of the few shining examples of a successful bankruptcy. This company's up unbelievably. If you held through there, you're a big, big winner. But with all that said, it's at $8.6 billion. They had contracts years before anybody else did for high-performance computing. Yet, if you look, their forecast, 94% growth this year, 71% growth next year. And you'll say, well, maybe that's because they're more mature and they've already got a lot of AI built in. Well, they're estimating only $1 billion of AI revenue next year. That's a third of what IREN is doing. So from a perception standpoint, I think most people would say Core Scientific's been in this game a lot longer. But IREN has lapped them. Again, none of these companies are making a lot of money yet, but you can see they're from projections this year to next year, they're all trending, number one, in the right direction, and number two, more importantly, into profitability, which makes a big, big difference for investors. They want the light at the end of the tunnel. When's this company going to be profitable? And then how profitable can they be from there? How much are they going to grow from there? So a lot of these are setting up. That's why I think there's going to be a lot of winners. Not all of these are going to be winners, right? We know that's never how it works, but I think there's a lot of potential for a lot of upside in a bunch of these stocks. That said, this was not a good week. This is June. June is shaping up to be not that great of a month. I will remind everybody, I think it's important before we go through June, this was May. Hive was up 88%. Keel, formerly Bitfarms, up 87%. Hut, 65. Riot, 57. BitDeer, 55. Cleanspark, 46. IREN, 40. That's in 1 month. So the fact that these stocks are cooling off a little bit this month, they just went ballistic last month. Now, the one that worries me, that I think is an anomaly, you'll see IREN, 40% is a lot of growth, especially since they are the biggest company. So the amount of market cap is huge. But 1, 2, 3, 4, 5, 6 companies did better than this in the month of May. Yet in June, IREN's getting crushed. They're in third to last place. We haven't looked at June yet, so we're looking at it right now. right? Whereas these other companies that had these big run-ups are all pretty flat on the month. IREN's getting destroyed. Bitcoin down 19%. IREN down 26%. Now, IREN really does not trade on Bitcoin anymore. There's several companies that are completely untethered from Bitcoin. Even though IREN was not so long ago competing for the largest Bitcoin miner in the world, they are going to, I do not think they will be mining Bitcoin at the next halving at all. They were at 50 exahash. So they ran up to 50 exahash, but I think they're going to convert all of that to data center. And I think they're one of many companies that will be out of the Bitcoin mining business. There's some that I think will stay in the Bitcoin mining business. Like, for instance, ABTC is a pure play Bitcoin miner. I think they're likely to stay in the Bitcoin mining business. Marathon, I think, is likely to stay in the Bitcoin mining business. CleanSpark, I think, is likely to stay in the Bitcoin mining business. All of these companies will diversify and add as much AI as they possibly can, but it doesn't mean they'll stop mining Bitcoin. Some of the other companies, like, for instance, Keel has already said, we're out. We're out. By the end of 2027, we will have 0 Bitcoin mining machines plugged in. So there's these companies are doing different things. But other than ABTC, and obviously other than Microstrategy, which is a treasury company, all the rest of these companies are some combination of Bitcoin mining and high-performance computing data centers. So this was June, not the best month of all time. CIFR up 10%, Keel up 6%, Riot up 5%. You got a bunch of these up 1%, down 1 or 2%. And then CleanSpark took a hit, Hive took a hit. Bitcoin's down 19%. So, all of these did much better than Bitcoin. But let's go to year to date. This is a little bit greener picture. So I'll start at the bottom. You got Bitcoin down 32%. Bitcoin's having a tough year. We know we are in a bear market. We're in some phase of a crypto winter. I think it's basically over. I know a lot of people think there's between some time left and a lot of time left. We'll see what happens. But any way you slice it, we're in a big time bear market for Bitcoin, and we're in a full-blown crypto winter for all the altcoins. So Bitcoin down 32% year to date, MicroStrategy down 46% year to date, and ABTC, the only pure play Bitcoin miner, down 58%. All these other companies are green on the year. IREN is now, these two are kind of different companies. These are the only two that are not AI plays. IREN's the biggest. We just looked at it. They are the biggest AI play out of all these companies. And they're in last place out of all of these companies year to date. This is why I think this stock has the most upside potential out of everybody. I think it's being suppressed for the time being, and I think it's going to get its day, but today is not its day. Let's end this poll. CleanSpark and Hive. We'll just do one more real quick. Let's get to who's left. Getting the last 4 companies in. Okay, I think this is it. So the last group, Keel, formerly Bitfarms. TerraWolf, CIFR, ABTC. Go. Okay, I just want to go through Micron quickly because the bottom line is this is driving the market, and right now, I think everybody can agree AI is the market. And the reality is, if I look at our list of stocks that we follow most closely, Hut's an AI play, Keel's an AI play, Riot's an AI play, TerraWolf's an AI play, Core Scientific's an AI play, CIFR, yes. Marathon is moving into AI. Right now, they don't do any of it. They just made a big purchase. They're moving in. They're new. Marathon and CleanSpark right next to each other. They're moving into the space. They are unproven. But yes, they're up not based on their prowess in Bitcoin mining, but based on the fact that they have shifted gears to get into AI high-performance data centers. Hive just had an announcement, which we'll go to next. They are moving into AI. Hive seems like they've been in AI forever. They've been talking about high-performance computing and data centers, maybe more than anybody, but they've been doing very little about it until a few months ago. And they got a gigantic pop on news of, I think it was a 325 megawatt build out. They got a contract that was decent sized, and now they just raised some more money yesterday, I think. So they got plans ahead. So this is an AI play. BitDR is another one. BitDR, Marathon, CleanSpark, Hive, and BitDR, they are just behind the rest of the group. All four of these have plans to diversify their revenue and get into the data center power game. But these four are behind the rest of the group. They just are. Now, BitDR is also different in a couple other ways. Number one, BitDR is now by far the biggest Bitcoin miner. They were at 70-something exahash in their last monthly operational report. They mined over 900 Bitcoin last month. I think the biggest total we saw, and most people aren't reporting theirs anymore, but the biggest total we've seen since the halving was in the 700s. They did 921 or something like that. And they continue to build out because they make their own Bitcoin mining machine. So the cost equation for them is very different. They're a vertically integrated company, all the way vertically integrated to the point where they make their own Bitcoin mining machine. So they're highly efficient, and so they have a little bit of a different story. But with that, all of that said, they are moving into AI as well. They do already have some stuff in the cloud, and they're looking to add AI revenue. In dead last place, other than the non-AI plays, is IREN. So again, I come back to, why is the company that has the most contracts by far, that has, in my opinion, at least tied for the best, if not the best, track record on execution out of all these companies? There are others. CleanSpark has an incredible track record on execution, in my opinion. Who else on the list? There's another one that jumps out at me. Keel. Two different things. Operationally, Ben was always their operations guy. Operationally, this company always performed exceptionally well. The C-suite made some big financial mistakes. This is a different company as a result of that. Having said that, Ben is now the CEO, and I think he has righted this ship. He has always proven to be excellent at execution, so I have a high level of conviction in Keel. Oh, by the way, they're now officially added to the Russell. So Monday, all the indexes that follow the Russell are going to have to add Keel. I would not expect some massive run up for a couple of reasons. Number one, in anticipation of that, a lot of people ran the stock up, feeling like they could sell it to the companies that have to buy it. So this is one that I think front ran the news. I don't expect it to crash. I don't expect it to explode, but it is a fundamental shift from that day forward. They are in every Russell they're in the Russell index, so everything that follows that has to continue to buy and maintain shares of Keel. So that's very bullish scenario, right? This is all the plan that we laid out for those of you who are members. You know, we've been talking about this for a year and a half. Redomicile to the U.S., get over $5. Now they're on the Russell. Next, there's a lot of rumors about contracts. Next, they need to secure a big contract. So they've played out their run to $5, which we called, when this was trading for $1 and change. And I think there's a $5 to $10 scenario, but I do think that's contingent on them executing their build out and getting a high profile contract. Not a $200 million contract. It's got to be a $1 billion plus contract. That's my opinion. Do you see Keel at 15 by the end of the year? I think that's a super aggressive price target. To me, this was trading with a one handle 2 months ago. So it's been between $5, $6, and $7. I think a run to $10 is super realistic. To me, everything after $10 in the next 12 months is the absolute bonus round. But when these stocks run, they can run very hard. So it's certainly not out of the question, but it's not my personal price target for whatever that's worth. Oh, and Sour Melon Gaming is saying IREN just got added to the Russell today too. So everything I just said for Keel is true for IREN. So a lot of good news going on with these companies. And again, my point of this was if you go through the list to anywhere from a small extent to 100%, these are all AI plays. So when I talk about Micron, which I'm going to, that's why. Let me find... All right, this stock's trading at $1,132. It was down 6.69% today. That might seem bad, but it was up almost 15% yesterday. So it gave a little bit of that back. There was a rotation in the money that got spent today. You could see the grossly beaten down software stocks performed exceptionally well today. A stock that ran up 15% yesterday, yeah, it gave, not a half of it back, but a bunch of it back. And this stock's up 1,000%. That's not an exaggeration. The stock is actually up from a year ago, and this is 14 months ago, so a little more than a year ago. This was trading at $61 right here. So that's up 1,774% in 14 months. And you might say, well, that one's done. I think this stock's going to double. So that is absolutely not financial advice. I don't know the future. This stock just ran up 1,700%. It's pretty rare that you look at a stock that's run up 1,700% in 14 months. First of all, that's highly unusual. Usually, these types of runs are reserved for microcap stocks or nanocap stocks. This is a $1 trillion company. This company's been around a long time, but their business fundamentally changed. And this is one of those deals where people who say, well, you know, it's no different. This is no different than all the previous times. We've had runs. Micron's had years where they're a memory stock, and you know that was in demand. They got to raise their prices, but you know it lasts for a year, maybe two at the best, and then it pulls back. It is my very strong opinion that is not at all what's happening here, and it's taking the market an unbelievably long time to figure this out. With a 1,700, almost an 1,800% increase in their stock price, they are trading at a 10 forward PE. I'm going to put that in perspective in a few minutes because it's ludicrous. Oh, by the way, when you see what they did with earnings, that 10 forward PE could easily be as low as a 7 because they didn't just beat earnings. They had what could be the best quarter of any company ever. Since I've been doing this. Here. Micron Technology Inc. reports record results for the third quarter of fiscal 2026. Revenue $41 billion. Almost got carried away into the trillions there. Last year's revenue, $9 trillion. So they went from $9 trillion to $41 trillion year over year. Even quarter over quarter, they went from $23.8 billion to $41.4 billion. That's just from last quarter. A year ago, their gross profit margin was 37.7%. Last quarter, it was all the way up to 74%. That's a double. The market was predicting they were going to get over 80% this quarter. 84.6%. They beat. By the way, this revenue was a massive beat. Net income, $28 billion for the quarter. Another massive beat. So they beat on revenue. They beat the forecasted number. There was a whisper number that was higher than that. They crushed that. To put this in perspective, in one quarter, they made $28 billion of profit. They had $41 billion of revenue. I'm going to show you a chart. This is their annual revenue for the last 10 years. The most revenue they've ever had in a year as a company. Their best year, the last time they were cyclically having a great year and you know, this was an outlier. $30 billion in 2022, all the way down to $25 billion in 2024. From that $25 billion in 2024, they did $37 billion last year. You guys remember what this year's number was? So $37 billion's the biggest year they've ever had. They did $41 billion this quarter. They did more this quarter than in any year they've ever had in the history of their company. Everybody thought, well, you know what? They're going to have a good quarter and they're going to give guidance that's even better than that. They're probably going to get like 40 or 45 billion. 40 to 43 billion, I think, is what the market was looking for in guidance. Their guidance, let me see if I can find that chart. Okay, so here, revenue, $41.5 billion, revenue up 74% quarter over quarter. That's not year over year. Year over year, this would put them in the Hall of Fame. This is quarter over quarter. Year over year, 346%. See if I can find what I'm looking for. Okay, revenue 41 billion, gross margin 84.9 it says here. Operating income 33 billion, net income 28.8 billion, earnings per share $25 per share. I want to show you something real quick. Last year, which was their best year ever, on the year they made $8 a share of earnings. This quarter, they made $25 a share. Triple. This quarter, they made triple in one quarter than they've ever made in an entire year. Cash flow from operations, $25 billion for the quarter. Fourth quarter guidance. Revenue. Forget everything else I just said, because this is why they went ballistic. Their guidance for next quarter is $50 billion of revenue. Remember, this is a company as of 2025, the most revenue they ever had in a year was 37 million. The most they made earnings per share in a year was $8. They're anticipating $31 earnings per share next quarter on top of the $25 earnings per share they just had this quarter. The entire market is calling for the fact that this stock has run up too much. There's no fundamentals behind this company. This is a commodity. This is the word. Go look. If you do research, this is what 90% of your research is going to tell you. This company is cyclical. They don't get forward PEs. They get forward PEs of 2 or 3 or 4 because anytime they have a good year, it's an anomaly and it's not going to last. They're going to make over $100 billion this year. That's more than the market cap of the company was last year. So when you see them up 1,700%, this is what they're doing. Oh, by the way, gross margin, 86%. On the earnings call, they basically talked about the fact that they have line of sight through 2028 to keep doing what they're doing. They have multi-year, up to 5-year contracts with all of the biggest players in this space. So they're not guessing what they're going to do. Their earnings this year are going to be, I don't know, 5-10 times better than the best year they've ever had. And their earnings next year are going to be even better. And it's likely their earnings in 2028 are going to be even better than that. So when people are saying this deserves a 5 forward PE or a 3 forward PE because this is unsustainable, they are now a key part of, and there's several bottlenecks in high performance. There's only 3 companies in the world that make the chip that these guys make. By the way, all 3 of them are now 3 of the 15 biggest companies in the world. So you can argue, is this sustainable? I would argue it's only going to get better quarter after quarter after quarter for the next probably 10 to 15 quarters. And so a double on this stock to me is, I think that's nothing. Right? That's going from 1,200 to 2,400. or from $1,100 to $2,200 a share. Now, I understand they were $60 a share 14 months ago. So you're talking about in 2 years going from $60 a share to $2,000 a share. Well, guess what? There's another company that already did that. SanDisk is at $2,090 a share. This company was at $28 a share in April of 2025. So they didn't pull a 60 to 200. They pulled a 28. Sorry, to 2,000. They pulled a $28 a share to $2,000 a share. So when somebody says it can't be done, I understand. These are crazy numbers. But this is why I say this time is different. We've never seen companies do that. You take, right, companies like SanDisk, which is also in the same space. These are all memory chip type companies. They've been cyclical. They've had great years. They've never had anything that resembles this. They've never had anything that's 1/10 of what this is. And they've never had an underlying reason that's sustainable. Does anybody doubt that AI is what's going on and it's what's going to keep going on? Now, it won't keep growing at the same rate that it's growing, but we have years left of this to go. So, the market can be irrational. Who knows what happens? But again, I think SanDisk is in the same boat. They've gone from $28 to $2,000, and I think they could double. This sounds like madness, and please, don't take that as financial advice. Most people would tell you that a stock that's up 8,000%, right? This stock's up 8,000% in 15 months. Most people would tell you that's probably not a stock you should invest in. This is no longer an asymmetrical trade. Up 8,000%. Right? You don't know what the market's going to do. The market could just say, we're sick of it and just sell it off. Somebody could pull a short report and short this stock, and big money could manipulate the stock. But you don't know. But to me, from a fundamentals standpoint, this is another one trading at like an 8 or 10 forward PE. Doesn't make sense to me. So I'm going to show you. There was an article, and Micron looks cheaper than big tech if the profit boom lasts. So this was from an article. I pulled the picture. If we start at the bottom, Apple's not a high growth company, right? Apple's been around forever. Apple and Microsoft traded places as the biggest company in the world for 20 years. Yeah, they're a nice growth story. They're still growing. Apple's a great company. But if I look at Apple, by the way, if we look, where am I here? On Micron, you're going to see 246% growth on revenue, and then another 78% growth on top of that. But they're going to go, last year, they earned $8 a share. Next year, they think they're going to earn almost $150 a share. That's why the stock is up. This was a $60 stock. They're going to earn more than that in just 1 year. This was trading at less than a 1 multiple. So, at $150, $1,500 is only a 10 forward PE. So it's not even a 10, right? You're going to see the rest of these stocks are 20 PEs, 25 PEs, 30 PEs. Some of these things, Palantir is 100 PE. They're not growing anywhere near this amount of money. They make a small fraction of what this company makes. Let's go back to the chart. Oh, I want to look at Apple and just put things in a little bit of perspective. Nobody denies Apple's a great company. 15%, and you can love them or hate them. You could use their products or not use their products, but they've been one of the two monsters in the stock market for the last 20 plus years. 15% growth this year, call it 9% growth next year. Not 200%, not 80%, but this is a solid company. So what's a company like this deserve from a PE standpoint? By the way, Apple's going to make $9 a share. Micron's going to make $150 a share. So Apple trades at almost 300. So if you do the math, right, Micron should, if it was all things being equal, should be 15 times more expensive than this. Right? It should be $4,000 or more. Now, all things are not equal, but this is lopsided. Apple trades at a 30 forward PE. Micron trades at a 9. So understand what that means is if these traded at the same forward PE, Micron would be a $3,500 stock. But they don't. Micron trades at a lower PE than everybody on this list by far. Amazon, a forward PE of 27. By the way, Amazon has spent 7 years consolidating. They are now trading at a 33 PE and a 27 PE. So when you look at a company like Palantir, and if you own this, you have your own investment thesis, do whatever you want to do. But Palantir is trading in the 150, 200 PE range. Companies that do that are out ahead of themselves. Even after this gigantic pullback, if I go look at Palantir, right, and Palantir has gotten crushed. This is one of those software companies that's gotten crushed, right? Their 52-week high was $207. They're a $112 stock. They're down dramatically. But look at their trailing PE, 126. That's after they're down almost 50%. They're still at 126 trailing PE, and they're looking to double their profitability. So that still puts them at like a 65 forward PE if they accomplish this. So, sorry. Actually, yeah, that's right, earnings. Year ago, 75 to $1.47. That's about double. So right, Micron's at 9 forward PE. These guys are at 60 or 70. You make the call. My point of all this was that's where Amazon was 7 years ago. So they lagged the S&P 500 for 5 or 6 or 7 years. They're now down to multiples that make sense. A 27 forward PE, I'm thinking about buying Amazon. I haven't. But it's now a stock I would consider buying and holding long term in my conservative part of my portfolio. NVIDIA, they're in this exact space. What is NVIDIA? They are the AI company. Right? It's their chip that everybody needs. They're at a 19. They're at a 34 trailing. They're at a 19 forward PE, more than double what Micron's at. Microsoft, 19 forward PE. The entire S&P 500, pick a random stock. The entire S&P 500 is at a 22 forward PE. And Micron's at 9. So you will get people to defend this to the end. You will get people to say Micron, by nature, is a significantly worse company than all of these other companies. They have no moat. Their product is a commodity, and commodities are not worth forward PE. That is the argument that you will get. Counterpoint, they have something everybody needs so badly that not only are they naming their price, but they're saying, you got to sign a 5-year contract with me and promise to keep paying this price. So I think everybody's got this wrong. And I said on the Tuesday live stream, this is the other thing that I said. Micron is going to, I didn't say beat, they're going to destroy on revenue. They're going to destroy on revenue, they're going to destroy on profit, and they're going to drastically raise their forecast. And that's exactly what happened. And it's not because I have a crystal ball. It's because I live in the world. I see what's happening, just like all you guys do. Yet, I watched a panel of people on CNBC an hour before earnings, maybe 2 hours before earnings, all sit there and say, watch out below. Micron's had a huge run up. They're going to have a great earnings report, but the stock's going to get wrecked. Up 15% after hours. So they don't want to get it. It's against what they've been. Some people are so invested. It's like, if you're familiar with the poker term pot committed, they're so committed to their point of view that they're unwilling to take a step back and go, wait a second. That used to be true, but it's not true anymore. It's different now. And I would argue that's what's going on with Micron. And I'll tell you, another one right here. That everybody's all in on AMD. What is the fundamental difference between AMD and Micron? Why is AMD some magical thing that's not a commodity, but Micron's a commodity that's worthless? AMD is trading at 175. That's right. 175 trailing PE. Now, they have a lot of growth, so let's look at their forward PE to be fair. Year ago, they made $4 a share. This year, they're looking to make $7. Let's even go to next year. They're looking to make $13. That's triple. So that puts them at maybe a 60, somewhere in the 60s forward PE. So why is AMD a 60 forward PE, but Micron's a 9 forward PE? If you feel like you have a reasonable answer to that question, then you wouldn't want to buy Micron. You'd say, here's the reason why, so I'm not buying Micron. But if you don't think that makes any sense, then one or two of the following things are correct. Micron's underpriced, AMD's overpriced. I personally believe AMD is going to go on a big run from here. It's got momentum. In these cycles, momentum is real. You don't trade against momentum. It has not run up anywhere near the level that these other stocks have had so far. So if you go AMD, which is now considered an AI play, you know, they're not NVIDIA. Everybody understands that, but they're considered the next closest thing to competition for NVIDIA. But you're going to see this company, I'm going to say only, but it's up 570% in 14 months. Now, that's a massive run up, but it's not 1,800%. It's not 8,000%. So I think this is an easy double, not because the very different situation. I don't think the fundamentals dictate that this stock doubles. We just looked, it's trading at a 60 forward PE, 175 trailing PE. Trailing PEs I tend to put no weight on because these are companies going through a transformation from one market to a new kind of market. So what they've done in the past is not as fair to judge. But what they're going to do going forward is exactly what you should be judging. So that's what your forward PE is. So you're talking about 9 versus 60 something with AMD. And again, I think AMD is going to double on momentum, just strictly as an AI momentum play. And then it's one I would get the heck out of the way. I own a small position in this just because I bought it a while ago, nowhere near these lows. But, you know, I bought it when it was still on its run, and it's run up significantly from there. And my concept was I would dollar cost average in if it ever got back to 405, but I don't think that's ever going to happen. I wouldn't be surprised if this is $1,000 stock. So that's my opinion. And so if this is worth 1,000, what's Micron worth? So I don't think people are paying enough attention. I mean, obviously somebody put an article together and asked the question, but they asked the question, if the profit boom lasts, price to earnings, or PE, compares the stock's price with the company's profit. Micron's expected profit jump makes its future PE look far lower than its past one. Yeah, because it is. It's far lower than the competition. If you just grab a stock out of the S&P 500, the whole index averages a 22 forward PE, which means if this was just an average stock, it should have more than double the price that it is today if it was trading as just an average stock like all the other stocks in the stock market. So what people are saying is this is less than average. It's just a commodity, and it's, you know, for that reason, it doesn't have real value, and it deserves this penalty, this gigantic penalty. So let's just do, I'm running way over, but we're going to go just to get a final number. Keel won this one by a mile. Just give me 1 second. I'm typing in a poll. There's your 3 finalists. Let's see who's the winner on the day. What is the best investment at today's price, where they sit today? The 3 that won their brackets by far were Keel, IREN, and CleanSpark. Who's the champion? Who's the grand champion? So let's just look at a few things just to see the sentiment that's out there. I want to show you guys some of what's going on. All right. I lost a bunch of... Oh, you know what? I'm going to take a time out from that. We didn't actually talk about Hive's announcement. Hive announces upsizing and pricing of private offering of US $115 million of 0% exchangeable senior notes due in 2031. So this is what I'm talking about with Hive. They are running at a smaller scale. You'll see other companies raising $1 billion, $3 billion. Of the companies that we look at, $800 million. Hive's raising $115 million. So they're not scaling at the same level, but they have gotten into the game and they are allocating proportionally a lot of their resources towards getting up and running and they did get a contract for a data center and they're raising money. So, and you'll see if we go to Hive, they are a $1 billion market cap. To put that in perspective, ABTC, which is a pure play Bitcoin miner, they're not ever going to be in AI. And I'm saying that for a reason. So again, who knows what the future holds, but their parent company is Hut 8. Hut 8 is a data center company. ABTC has all their machines hosted by their parent company, which is Hut 8. So if they were to go into the data center business, they would literally be in competition with the company that owns them and makes those decisions. So I think it's fair to say it would be unreasonable to think that they're going into AI, and they've been crystal clear. They are a pure play Bitcoin mining company. This is a $1.2 billion company. They are worth more than Hive. I understand this looks like more of a train wreck. Their stock's at 71 cents. Right? If we go take a look, this stock was at $14.52 at its peak, and it kind of hit that twice. Back in May of 2025, in September of 2025. Now, when this deal went through and this spun off as its own publicly traded company, essentially through a merger with another Bitcoin mining company that was kind of left for dead, we kind of pounded the table on this channel that this is insanely overpriced. This was a $7 or $8 or $9 billion market cap company. Everybody knew it had no business there. I don't short stocks, so I did not short this stock, but sometimes I'll call out what I think. Nothing's a sure thing because, again, momentum is real. This stock could have doubled on momentum, even though it was already priced to insanity. So that's the reason I don't short stocks, and I've seen it happen all too many times. But we said ultimately, when the dust settles, this is not a $7 or $8 or $9 trillion company, or sorry, $1 billion company. So, this thing's down 95%. That's a beatdown. With that said, it still has a bigger market cap than Hive. So I think Hive, even though it's not scaling at the level that its competitors are, it's 1/10 the market cap of a lot of its competition. So this is it. You can see it bounced off of a nice line of support today and closed at $4. This got up to, in this recent run in June, this got up to $5.34. Back in October of 2025, when everything peaked, this was a $7.83 stock. This green line goes back to August of 2022. It took that out. So, that's a 5-year high. It's trading at $4. It could almost double just to get back to where it was. Right? I don't think anybody will be shocked if this goes from a $1 billion market cap to a $2 billion market cap. Now, you got to be careful. It's probably got to go to more like $2.5 billion because they're going to raise some money in the middle and that dilutes. So in order to get back up to $7 or $8, but I think that's a pretty modest price target in my opinion. So even though their announcements are smaller, they raised $115 million. They're 1/10 or 1/15 the size of a lot of the stocks that we look at. So just bear that in mind as you read their announcements. All right, now IREN is in first place with 43%. Keel, formerly Bitfarms, second place at 33%, and CleanSpark in third at 23%. We'll just vote for another minute here. I got through a very, very large portion of my list today. I stayed a bunch extra, so do me a favor. If you guys appreciate the extra time, if you can smash the like button, it still does help the stream on the way out. And if you're not a subscriber and you enjoy this and you want to come back, consider subscribing to the channel. Of course, it's free to do. And special thanks to our members. I know some of you are still hanging in here. I see Sour Melon Gaming making a comment a little while ago. So special thanks to the members that keep the channel going. All right, I want to show you just... This is how much opinions diverge. And let me find this article. I feel like there's a bunch of articles that went missing. What did I do? If they went missing, it's likely because I closed them. Ah, there they are. That's my mistake. All right, I just want to look at it's the same person, and he said two things that I just want to go through. Jeremy Grantham says this is the most expensive market in American history. This was on CNBC. Key points: based on the value of stock market compared to GDP with modifications. Don't know what that means. This is the most expensive market in American history, Grantham told CNBC's Squawk Box. While the GMO co-founder said he wasn't sure there was a comparable period, the tech bubble of 2000 is the closest analogy. I'm just here to tell you this guy absolutely, in my opinion, and I can't read his mind. This guy does not believe a word of what he just said, in my opinion. We just looked at Micron, one of the hottest stocks in the stock market. It's trading at a 9 forward PE. Let me tell you what was happening in the tech bubble. Most of the tech companies had no PE because they didn't make any money. They didn't have any profit, right? You can only have a price earnings if you have profitability. Most of the tech company bubble companies that ended up going out of business, even the ones that stayed in business, didn't have any profitability. Oh, by the way, half of them didn't have any revenue. We just looked at Micron that just had more revenue in one quarter than they've ever had in a year, more profitability in one quarter than they've ever had in a year. They have a 9 forward PE. The things that did have a PE were 100 forward PE, 200 forward PE, 500 forward PE. That was the dot-com bubble. There is nothing about what's happening right now that resembles the dot-com bubble. Nothing. So do your own research. If you're old enough to remember, then you were there and you know what was going on. If you're not old enough to remember, take a look at those stocks. You'll have to research them because the vast majority of them no longer exist. You think Micron's not going to exist? You think NVIDIA's not going to exist? You think Microsoft and Amazon and the Mag 7, you think any of those are going away? I don't think so. You think SanDisk is going away? So people love to say stuff like this. Oh, this is worse than the dot-com bubble. This is the most overvalued stock market in history. Well, we just looked. The S&P 500 is trading at a 22 forward PE. That's pretty average. Forget bubble. That's average. The hot companies, a bunch of them, like Micron, is trading at a 9 forward PE. That's way below average. So to sit here and say this is the most expensive market in American history, I don't believe this guy's foolish. He's a billionaire investor. I'm pretty sure he knows what he's talking about. But yet he'll sit here and say that this is the most expensive market in American history. You judge for yourself. So what else did he say in that interview? Hold on, that was the wrong one. Billionaire investor Jeremy Grantham, same guy, same interview, says Bitcoin will dwindle away with a whimper. Over years and years, decades and decades, it will dwindle away, I suspect, not with a bang, but with a whimper. It's not a stable form of value. The co-founder of investment firm GMO and a longtime market commentator known for his calls on asset bubbles said Bitcoin is, quote, a useless, speculative, end quote, asset without intrinsic value. Bitcoin hasn't outperformed during a bull market and questions its practical use. Now, Bitcoin peaked in October at 126,000. So if you want to take the 9 months since then, which has been a crypto bear market, and say that Bitcoin's underperforming, okay, that's arbitrary and of no meaning or value. Take Bitcoin over the last 10 years, since inception. It's still the best investment in the history of the world. Yeah, we're in a bear market right now. So, judging it historically from what I think is the bottom of the bear market, just take a quick look at what Bitcoin's doing right now. So, it is hugging this 60. We're $11 away, now $18 away from $60,000. So, I will tell you, if we do this over the weekend, I will not consider that losing this $60,000 line. You'll know when we've lost the 60. It might happen, but you'll know when it happens. And it won't look like this. So, but again, we know we're down more than 50%. Yes, we're in a crypto bear market. Bitcoin's way down. But this guy thinks it's, quote, useless. So, the same guy who thinks we're in the biggest bubble in the history of the most overvalued stock market in the history of the stock market. That was his two big takeaways when he got in front of the camera. So, listen, he's a billionaire investor. I'm not saying he doesn't know what he's talking about. You got to know what you're doing to make $1 billion at this. But sometimes what you know and what you say maybe aren't the same thing. Food for thought. All right, I am super over, but let's go through the results of this poll. Best investment at today's price. The winner by a very small amount. IREN, 37%, just beating out Keel or Bitfarms at 34%, and Cleanspark up. Oh, we got votes. They're tied now. IREN and Keel are now tied at 36%, and Cleanspark is at 28%, a respectable 28%. It's not necessarily a three-way tie, but this was very close. I'm going to end it on a tie because I think you guys got the exact right call. If I was going to invest, actually all three of these are big positions for me, and I have a high level of conviction in. So I happen to agree with you guys on this. I want to thank everybody so much for hanging out extra time. Again, if you are not subscribed yet, consider subscribing to the channel. It's free to you. There is a membership. You can look into that. We do talk every Tuesday after the market closes, members only, and we get to talk about a lot more stuff than we do on this stream. But, you know, it's free to be a subscriber. So thank you again, thank you again, everybody, very much for sticking with us on a Friday afternoon of what was a very crazy week. So I'll leave you with the thought, go Bitcoin and have a fantastic weekend. And to the members, I will see you guys on Tuesday after the market closes. Thank you.